Section 2, public oversight of the audit profession. Now, recently, there's been a shift which basically increases public oversight of the audit profession as a result of the corporate failures, for example, that I mentioned earlier. And whilst there's been self-regulation and still exists self-regulation, that is not enough, because ultimately there needs to be an enhancement of public trust. Ultimately, that's what an insurance engagement is, to enhance confidence. So, we need to think about what sort of oversight actually exists. And first of all, we will look at what's actually in the UK. So we have the FRC, the Financial Reporting Council. And note that this FRC is going to be replaced at some point with this ARGA, the ARGA, the Audit, Reporting and Governance Authority. We work for ACCA, and therefore, ultimately, auditors are regulated by the ACCA, okay, their supervisory body. And in order for that level of quality to be maintained, the FRC, or ARGA, will constantly visit the supervisory body to make sure that the quality standards, the level of exams, the standard of technical ability is maintained. So the FRC has this professional oversight team to make sure the exams, the syllabus are robust enough to ultimately produce good quality financial professionals who can also audit. Now the FRC also looks at individual audits as well. So as well as visiting the actual supervisory boards, they will actually look at audits themselves and determine whether sufficient work has been done, whether auditing standards have been implemented, and ultimately has there been enough work performed in order to justify the audit opinion. And we have the Audit Quality Review Team, which does that for individual audits. Now in the US, we have a very similar oversight board, but we call it the Public Company Accounting Oversight Board, the PCAOB, which does very, very similar work to the FRC or ARGA going forward. It's recognised that they work in the interests of users in terms of investors, and recognising that an auditor is there for the public interest, and therefore the quality, whether the ethical framework is being adopted and whether they are independent, that ultimately is the aim of the Oversight Board. Now this came from the Sarbanes-Oxley Act, which was an act following the Enron corporate scandal a number of years ago, where business professionals have to be responsible for their actions in terms of whether the internal controls of an organisation are sufficient to capture major risks. And ultimately, we have our business professionals, our executives, our directors of the firms regularly sign off to confirm those internal controls do exist and are working. In relation to application, all of these companies that are required to file your accounts with the Securities and Exchange Commission, the SEC, ultimately they are under the umbrella of the PCAOB, who looks after the auditors, but also requiring, as I mentioned there, the CEO and CFO having to certify on an annual basis whether the financial statements have been produced with sufficient controls which have been designed and they operate effectively.